What's going on, everyone? In this video, we're going to recap and review some trades that I took and some trades that we took in my Discord room this week. I'm also going to go over a losing trade that I personally took, break it down, and learn something that we could use to improve for the future. I'm also going to go over why we take losing trades. The first one is an inevitable one. It's everybody has to lose in order to win. These are ones that we can't avoid. Just the market wasn't in agreement with our analysis. The second one is a stupid losing trade. They're ones that are avoidable, and 95% of the time, these stem from trading based off of emotions and not factual pieces of information. We're also going to go over how to turn a losing day into a winning day. If you have the right mentality, you can't take a losing trade personally, and you can really turn your day around if you trade with the proper analysis and you understand the market's context. So be sure to stick around. Drop a like on this video if you learn anything from it. And if you want a very good trading resource, I definitely recommend my Instagram. I will link this in the description below. I post daily trading recaps along with very good trading tips and tricks. Link to this is in the description below. You're definitely missing out if you aren't following it. Without further ado, let's get right into this video. So every morning I post pre-market plans just to narrow down my watch list, understand the market's context, understand supply and demand zones, and where we're looking to actively trade in the market. So not only myself could look to take a high quality trade, but other members in the Discord. So Tesla was on the watch list today because yesterday we bounced off of the 568 demand zone. The key was finding buyers as we wanted to see reversal with a higher high and also make a higher low. And a good area to gauge this was the 580 to 585 area where we wanted to see the reaction between buyers and sellers. What's key here, no matter what you trade, how you trade, is understanding the reaction from participants. No one knows what's going to happen, but your goal as a trader is to trade on the same side if you're looking along as the buyers and if you're looking to short as the sellers. And the only way to do this is gauge price and volume at the areas you're looking to trade. So not only did we have that in the pre-market plan, but I also posted this, which it's Friday. You know, one bad trade could ruin your whole week. There's no reason to hit a home run. You have to be defensive. You don't want the premiums to burn yourself. And I said, which is key, don't trade to just make money. Trade to hit your setups. Trade when your edge is present. And the money is a byproduct to all of that. Detach from the money and leave your emotions out of it too. This is kind of hypocritical because yesterday as well, I posted on my Instagram literally last night that trade when only your edge is present. Your edge gives you the advantage over the competition. For me, my edge is supply and demand and market context using price and volume. Many traders go into the market blind, they gamble, and they only trade when the market's moving up or down with no solid thesis, with no solid confirmation, and they don't trade when the odds are in their favor. So if we go to the Tesla chart, I'm going to break down this losing trade that I took. So if we look at yesterday's action, we did bounce off of this demand zone at 568. We were gapping up overnight, and we had the high that was put in before we sold off. If you look at a higher time frame chart, this is consistently making lower lows and also lower highs. So for the trend to start reversing, we need higher highs and higher lows to be put in. This also kind of goes against my edge and my rule of thumb. I adhere to very strict trading rules based on my edge and what I know works. Obviously, I go over how I trade, what I look for in the course. However, this coming down to the 580 level where I took the market long at 933 was not anything that I know works for me. I traded this because I thought, the key word is thought, Tesla was going to rip. I thought it was going to reverse, and I played same day expirations because I had a very big ego thinking that the market was going to reverse here just because I plotted a higher high or an area of support at 580 without gauging price and volume to confirm that this trade was going to, in fact, rally to the upside. So this was a stupid and avoidable losing trade because it was based off of my feeling and my intuition, what I thought was going to happen. First one is obviously a losing trade that you can't avoid. They all happen. So the market started coming down into this 580 level. Now if I pull up my E-Trade right here where I do my executions, I got long Tesla at 933. I played the 600 calls at $1.93. So if we go to the chart, this is exactly what it looked like. Again, no real reason to get long. At one point, this was a strong green candle. I should have waited for it to get maybe above VWAP, above the high at 580. And this goes against my thesis of only trading at a supply or demand zone with other context. Sometimes I deviate away from that if, price is convincing to me. However, there was nothing here, and I was just stuck in this trade. I did not have valid confirmation. I did not have valid confirmation from the market, and I did not have price to confirm it, and I did not have an area where I was going to stop if I was wrong. So the market just kept bleeding, and I was holding for desperation, thinking that it was going to reverse, and I took a nice 42% hit once we took this little pullback down to start the Friday in the first 10 minutes. So now what I'm going to explain here is really what separates the best traders, the ones that aren't attached to the money, the ones that can take a loss, brush it off, they don't take it personally, and what they do is they sit here and they look for the next best potential setup. I see a lot of traders, they get into the market without confirmation like I did, or they trade without an edge or a plan and they take a loss and pay for it. Or B, they take a losing trade and they don't focus on the next setup. Instead, they sit in their chair, they whine, they complain, and they think about how big of a loss they took. I could tell you after the worst trades you take, there might be the next best opportunity, and that's exactly what happened today for me on the S&P. So to get more context, let's go over the pre-market plan. For this, we had the 4130 to 4150 area, which was very key for me today. If we base here, I'm going to invalidate the supply and focus only on longs. If we reject, obviously the market could sell off. To the upside, if we base above 4141, I think we have a very good shot at rallying towards 4166 and 4176. So like I mentioned earlier, I already took this loss on Tesla. I brushed it off. I wasn't sitting there crying. It sucked. It hurts when you take a loss over, a stupid decision. However, I'm now focusing on the next best setup. I don't care that I took the loss because I know if I follow my plan and I follow my strategy, losses that I currently take are not going to affect me in the long run because I know my setup's trigger. I know my edge is very powerful, and I know I'm going to make money in the long run. So here we had the S&P 500. The first valid entry for this was the break of this trend line. We missed demand off of the news in the morning, and we sliced right through supply. So one key thing here is that supply imbalances or demand imbalances, like I said, just show you an area where the equation is not in balance, it's imbalanced, and we have to gauge the reaction at this level. So even though we are at supply, it's obvious here that we have no selling confirmation that the market is going to come down. Consistently making higher highs, consistently making higher lows, and in fact, we're just balancing out inside of supply, which is a bullish thing. Usually the best trades are the ones that react right away. So I saw this and the market started pulling back down, and at this point around, what time was it, 10:40, 10:45, I was interested in playing SPY calls for a couple of reasons. Majority of market leading equities were rallying as well. The market was basing, the Qs were pulling back into demand. So a lot of different factors, this has to do with market context, was aligning that we had more juice to squeeze, especially that we had this white space basically up here for price to rally into 4166 and then 4176. So if we go to a 1-minute chart, which is where I've been taking majority of my entries in this current market, and we'll pull out my E-Trade. So I saw this, we could remove this for now. I saw this pullback into this area, and what I liked here was we broke below this low. And at this point, if you don't understand supply and demand, if you don't understand the content that I teach in the course, you all know that this right here is not a flag for me to get short. In fact, this is a red flag to the downside, and potentially watch out for the long side if we start making our way towards high a day. So at this point in the intraday commentary tab in the chat room, where essentially I post my thought process as the market is developing, I said I want to see if the 4142 area could hold if we pull back. If we do and make our way to the highs, I'm going to try SPY calls, stop below the 4139 area. So the market pulled back, didn't quite get to 4142. However, that was my area that if we were above, the trade would be valid. So if I pull up my E-Trade over here, keep this in mind too. Keep the context of this. I took a very shitty Tesla trade. So in the back of my mind, I'm trying to not revenge trade, but I'm trying to find the quality high setup to make some of my money back. So at 10:48, I got long SPY, the 416 calls. These were 2 out of the money at this point. Market started selling off. 10:48, let's see what it looked like. We were making our way back towards high a day. My stop was below now this low. I entered SPY calls, and then this thing started rallying. And at this point, once we got above the high, there's really nothing to commentate here. However, this action completely died out. It's bullish that we're holding above the high. However, on a Friday with same day expirations, you're going to get chopped up, and a pullback is going to completely crush your premiums. So it's very vital if you're trading 0 DTE same day that you take your profits fast, especially if scalping. Because at this point, we were having resistance at 4160, which I believe was yesterday or Wednesday's high or maybe Tuesday's highs. And then at 10:50, I got out of my SPY calls when the market started seeing some steam to the downside, broke below this minor support, and I got out because I didn't want to play games at 62 cents. So this was a nice 62% return on this trade. It goes to show you that do not take a losing trade personally. Wait for the next best setup. Don't take losses to your head. The next setup could be right in front of you. So eventually we pulled back, and if I was in this trade, yes, I could have made money because these eventually closed at, I think, $1.20. So these went up by end of day 300%, a little more than 300%. So if you were trading with $1,000, you know, these could have turned into almost a $3,000 total, $2,000 winner. If that math's right, definitely not. But, you know, there's really nothing here. We were moving small-bodied 1-minute candles right into side of supply. But my two supply zone rule was in effect. And eventually we came into the final target end of the day. So beautiful according to plan. There was no reason to short. Buyers very strong. And if you look at yesterday's action, buyers were, you know, pretty strong as well. So very good trade on this. Brushed it off. And with other trades too, there's opportunity cost. So at the same time I was in that losing trade with Tesla, I missed the Amazon trade from the pre-market plan, which was to take it long over 3,200. We bounced off of demand perfectly yesterday. I mean, if you got long end of day yesterday for a nice 30-point rally, beautiful trade. I know some members took that in the Discord. However, today we wanted to see continuation above 3,200. Fortunately, we got a nice, you know, 10 cent move or $10 move off of that. If I were to pull up the Amazon 3210 calls, these went up about at 9:33 from about, let's call it $10 to $15. So nice 50% return in a matter of 7 minutes, let's just call it. So beautiful trade off of that. And one thing I want to note here is we consistently made higher lows. So we pull back, we hold this low. Come up, pull back, hold this low. Now we're wedging, we finally break out, and with the market, this was not a valid trade. However, we did hold up above VWAP, low volume, and you kind of want to avoid this choppy mess. You want to see stocks that have momentum and nice clear action like we saw in the morning. Now Tesla, this is another one, goes to show you that the analysis was correct. I did not take this trade. However, this sell-off in the morning and where I stopped out, the basis to my strategy is knowing where majority of retail is active, whether they're opening up a position or closing a position, and then trading based off of their fear or their greed. So the market did pull back, and where I stopped out, you know, let's just call it down here. We were to consider this a demand zone in this area because price did eventually rally. So if you did catch calls down here, beautiful rally. And then all for the rest of the afternoon until 2 o'clock, guess where the market pulls back down into? Right inside of that demand zone. Right over here. And this had a beautiful, beautiful afternoon rally from the 576, 575 area all the way up to close to around 590. So hypothetically speaking, if you were to trade options, did not take this trade. This is just to illustrate the power of lottos or the power of same-day expirations close to the market closure. These at demand, I'm going to synchronize the crosshairs so you all could see this. At the time Tesla came into demand, down here at the bottom right, the Tesla 580 calls were about $1.77, and they went to a high of around 1160 or so. So this was a 568 from low to high, 568% return and a day if you were to capitalize on that sell-off into demand. So there's just tons of opportunities. There's tons of setups. There's different ways to capitalize on the market. The whole idea with this video is to trade only when your edge is present. If you trade when your edge is present, the chances of you taking a losing trade is very, very high. You need to have confirmation. You need to have a thesis. And you need to have an area where you're going to stop out if you're wrong and you're going to take profits if you're right. If you take a losing trade, brush it off. Act like you lost points in a game. You didn't lose money, and you could always win them back, and the next best setup could be right in front of you. So I'm going to end it here. If you did enjoy, please just smash that like button for me. Give it a thumbs up. If you really want to learn more, I recommend to check out the Invested Trade course in the description below. You'll also get access to the Discord at no extra cost. And follow me on Instagram. And besides that, I'm going to end it. Peace out.